Welcome in, everyone. I'm Gabriel Lima, and this is GoldFiend.com. The interview you're about to hear is with the founder of GoldMoney.com, James Turk. Let's listen in. Gold prices hit a new all-time high yesterday. Seasonally, gold usually sells off in the spring and consolidates during the summer, but this year we have gold hitting new all-time highs in the summer. What do you think is different this year from past years?
Yeah, it's a little bit unusual this year. There is often a seasonal pattern. But, like everything else when it comes to markets, just when you think you figured out the lock, they've thrown away the key. And again, this summer is an example of that. It's different than what we normally get. And the reason why it's different is there's so many monetary problems out there. And as a consequence, people are becoming increasingly nervous about holding national currencies, which are fiat, backed by nothing except government and politician promises, and want to go into the safety and security of gold and silver. So because problems in Europe are, quite severe, this sovereign debt crisis and, will the euro survive? Problems in the U.S. are quite severe. The problems with the debt limit and this seeming endless government spending that's going on. People are moving into the precious metals. And when you see the need to move into the precious metals for a safe haven, you don't care whether it's June, July, January, or February. I mean, you just do it, and it's just happening now during the summer.
That's probably one of the biggest deals in the market, right? That we have, gold recently hit an all-time high in the euro and the pound. It seems that people all over the world, they're figuring out all at the same time that fiat national currencies are being destroyed in the same manner, basically at the same time. Would you agree with that?
Yeah, I would agree with it, and you're raising a good point because if gold were going up only in terms of one currency, you would be basically saying that, well, that's not necessarily a gold bull market. It's really a bear market in that currency. But what's happening is gold's going up against all of the currencies of the world. So this is truly a global phenomenon. It is a true bull market like we had back in the 1970s. Back then there were monetary problems again throughout the world. People fled national currencies and went into the safety and security of gold and silver. They're doing it this time again as well.
James, in the 1970s, you could at least go to the Swiss franc, but even today, the Swiss franc is being debased just like the others. So really, there's no better shelter today than gold and silver. Is that a fair statement?
Yeah, I really do think it is a fair statement. But, a lot of people don't really understand yet gold or silver. And, there are a number of reasons why that's the case, mainly because of what they learned in school, the fact that, gold's been off of everyone's radar screen for a long period of time. There's a lot of anti-gold propaganda put out there by governments. But, as a consequence of this misunderstanding, some people might be reluctant to have too much gold or too much silver and therefore want to diversify by holding some national currencies. Maybe like the Swiss franc. But, I don't recommend it. I don't see any reason to hold any national currency because you're not getting the interest that you need to offset the risks of holding a national currency. It's a zero interest rate policy pretty much all around the world. And if you're going to be in a zero interest rate policy, why take the risks of holding any national currency? Hold gold and silver instead, because the fundamental difference is that with gold and silver, you're holding a tangible asset. When you own physical gold or physical silver, you have something that's tangible. Currencies are just a financial promise based on the bank where it's kept and the government and central bank and politicians behind the currency where it's issued. So in my view, given the fact that we're in a financial bust that's going to continue for a few more years, mitigate your risk by holding precious metals and avoid paper money of all sorts.
I wanted to get your opinion on U.S. debt. Most nations of the world, almost all actually, are, they're broke, they're heavily indebted, and treasuries today are still considered by many to be as good as gold. I know that's a pretty ridiculous statement. I believe you know that as well. What do you think the world is going to look like when the masses begin to figure out that treasuries are not a safe place to be?
That's really a tough question. Given the fact that the dollar is the world's reserve currency, the impact is not only going to be within the United States, but the impact is going to be global. It's going to be a mess, but how it's all going to play out is impossible to predict. But what we as individuals have to do, Gabriel, is we have to take those steps to protect ourselves and our families, come what may. And I keep coming back to, the basics. Gold's been money for 5,000 years. We've been experimenting with other things for 40 years. Gold became money in the first place and remained money for these 5,000 years because of unique attributes that it has. These attributes haven't been lost. They didn't disappear 40 years ago. They're still there. They've just been, forgotten or ignored. And as the silliness with national currencies, comes to its logical conclusion, as this over-leveraged governments around the world, as that comes to a logical conclusion, meaning that a lot of promises are going to be broken, you don't want to be in a situation where you're stuck holding someone's promise. You want to be in a situation where you're holding a time-tested and proven over thousands of years monetary asset, which is, gold and silver. So to protect yourself, you really need physical metal, regardless, what comes. And just take it day by day. We'll see how things unfold as we go forward from here. But the outlook for the dollar, the over-leveraged debt in not just the United States or Greece or Iceland or the UK, all countries today are pretty much over-leveraged. And it comes down to the issue that, where is wealth created? And, what are the issues that, made America great in the first place, which is independence and self-reliance. Wealth doesn't come from the government. The government doesn't create wealth. The marketplace does. Individuals operating and acting and interacting with one another in society. That's where commerce comes from. That's where wealth comes from. That's what we need more of. We need less government regulation, less government taxes, and let the free market do its thing, because that's where wealth is going to come from. And wealth is good because it raises humankind's standard of living.
I also wanted to get your take on a possible end of the cycle price target on gold. In the 70s, gold increased something like 25 times. Silver went up about 37 times. If we take the $250 low for gold in 1999 and we multiply times 25, that gives us a target of about $6,250. Do you think that by the end of the cycle we may see a $6,000 gold price?
Well, I think that's a little bit low. Back in October 2003, I was interviewed by Barron's, and they asked for my target when this bull market was over, which I said would be sometime between 2013 and 2015. And my view was that gold would be $8,000 an ounce. The gold-silver ratio would probably be about 20 ounces of silver to 1 ounce of gold, so silver would be $400 an ounce. Now, back in 2003, gold was about $350 an ounce, so 8,000 seemed pretty, ridiculous in terms of a forecast. But it is working, and gold's moving in that direction, and I think it will continue to move that way. But there was a logic, to me making that forecast. I related back to the 1970s, how gold went from $35 at its low to $800 approximately at its peak. In October 2003, when I had that interview with Barron's, gold was $350, which was approximately 10 times that price in 1971 of $35 an ounce. Now, the interesting thing is that it took in 2003 approximately $10 to purchase what $1 purchased in 1971 because of inflation over the intervening 30 years. So on an inflation-adjusted basis, if we calculate it, if gold can go from $35 to $800 in the 70s, it can go from $350 to $8,000 on an inflation-adjusted basis this time around. So I'm sticking to that forecast of basically saying history is going to repeat, or history has been repeating, and I think it's going to continue to repeat. And by 2013, we're probably going to be around $8,000 an ounce, maybe higher.
As far as year-end targets, you think maybe we'll see $2,000 gold this year?
Well,
is it possible?
Yeah, it's hard to really predict short-term targets. Next month, next 2 months, or even year-end. All you have to be focusing on is to continue accumulating in this bull market and focus on where the bull market is going. It's always going to go much further than you expect. It's probably going to last longer than even I expect and go even higher than I expect. But just continue to accumulate. The gold price probably should be over $2,000 now, but because of government intervention and anti-gold propaganda by the government, gold is still good undervalued. Even though the price has been rising, it's still undervalued by all of my historical measures. It's not quite as undervalued as it was, 10 years ago, but it's still very undervalued because what's happening over the last 10 years is that even though the price of gold has gone up, the dollar has been debased by inflation and all kinds of other crazy things that, central banks and bankers are doing to mismanage the dollar. So, focus on the long term, focus on not so much the price of gold, but whether it's good value or not. And it's good value on a numerical basis based on all of my historical measures. And it's also good value because of its usefulness as a tangible asset. It's a monetary asset that doesn't have counterparty risk. So I think that's important too.
James, I actually like silver more than gold. I actually think we might be going into a hyperinflation, and if we do go into a hyperinflation, I think silver might perform a little bit better because it's a monetary metal, it's an industrial metal. Do you like silver more than gold?
Yeah, I am more bullish on silver than I am on gold, and that's why I think the ratio is going to be going down to 20 ounces of silver to 1 ounce of gold in the long term, from 40 ounces of silver to 1 ounce of gold at the present. So, silver will outperform. The problem with silver, though, is that there's more volatility to it than there is with gold, and as a consequence, this volatility is not for everyone. But if you're prepared to accept that volatility, I think have 2/3 of your assets in your monetary assets, your precious metals assets, 2/3 in gold and 1/3 in silver. I think that's a good mix.